Welcome everybody to Stockradar Stocks in the Move for another week. Today's date is the 11th September 2025. Spring is hit in Melbourne finally, although it's raining again outside, but it's just a bit of blossom showing and we're looking forward to a bit more warmth coming on board. So an interesting week. We've seen the banks continue to be incredibly strong. The materials have taken a hit. Generally, most trends are in track. We're still trading out trends. There's many of them hitting the radar. The last couple of weeks, we've had probably about 10 new stocks come on board. A couple have come off, but we've built our stock pick count up the last couple of weeks, which has been good. So we'll go through those in a second. So just want to remind you all, education is what I do. Simplicity is what I focus on. Stockradar only trades trend reversals and new highs. That's all we need. We keep it simple, stupid. We all know that saying, but it's so important. Okay, so it's called focus. It's what we all need. So the simplicity of focus is a very, very important thing when we're trading markets. It makes life easier for us, and it keeps us really focused on what we need to do with our stocks and how we manage them. Okay, so trends hitting our radar, plenty of them there. Zip, Wesfarmers, NAB, Super Cheap Auto, Harvey Norman, there's lots of them there for us. New highs, trend reversals, it's all good stuff. So let's firstly get into our trend intensity ratings. Okay, firstly, well, Zip zoom to the top. Funny. GrainCorp, Harvey Norman, NAB's in there. This isn't a complete run of the top 10. There's actually quite a few this week. This is just a selection of them. There we've got to the Lottery Corp, Ramelius, Westgold come on board, Capricorn. So there's a few there, and you can see Zip there, which we'll have a look at it in a minute, which has had a pretty good return to fame pretty quickly. So we've got to be responsive to these things when they happen and make sure we run with them. And don't worry, don't doubt. Just when you get your signals, take them. Okay, stock pick count is up another 3 this week to 71. Haven't seen it in the 70s for a while, so that's good. We've dropped off one stock there. Brookworks comes off the database, so we're down to 159 stocks in our coverage at the moment. And this week we've had 5 new ones in and 2 come out this week. Okay, so that's the state of the nation there. So we'll go straight into, well, the portfolios are all full. They're all doing really nicely at the moment, as you can see from the homepage chart, because it gives you a very good idea historically of what we've done, was when the markets are tough, when they're good. But you can see things like the GFC have shrunk into this small amount of what we see now, and what we're seeing now will shrink again in 20 years on those charts. So it's an interesting thing, but the outperformance or the performance of our trading models against the market has been very, very, very powerful. And we'll go through that a little bit later on. So first, we'll go to the overseas markets, and we'll look at the Dow quickly, because there's not a lot of change in these overseas indices. They're making new highs. The trend is up. They're all doing pretty well. S&P is the same thing. Trend is up. Volume's okay. Nasdaq is the same, so similar picture there. The S&P, we've come off a little bit again. We've got that materials tainted in our ASX 200 in the leaders. Fortescue, Rio, BHP, they're all there in the leaders, so they will affect our index. And the banks have sort of neutralised that to some extent. However, we have a little bit of pullback, but again, pullback's always good in markets. We like to see trends go up and come down, but high highs and high lows is what we've got, and that's what we'd like to see when the trend is up. Okay, so then we go to gold, another trend up. There's lots of things trending up at the moment. Gold keeps going through the roof. Copper's neutral, is not doing anything at the moment, and also Brent crude is going down. So there's a couple there that are not doing too well, but the story's still the same. There's not a lot of change there for the moment. Okay, so now we'll go straight into the stocks. First off, we've got Newmont. So really what I just wanted to focus on today is really the high lows and the breaks we have. The 2 breaks we use are trend reversals, which are buy and weakness ones from when trends have come down to returning to up. That's when the cycle change, you get the accumulation change, and it moves up to an uptrend, or we get a new high, which is a resumption of a trend. With a stock such as Newmont there, it's resumed its trend there. It's had a nice new high here. Bit of small pullback after the new high, but nothing too bad. And it's continued on very highly here. And this has been a real leader, this one, Newmont. Some of the other gold stocks have been a little bit up and down, but this one really continued along well. And again, focusing on the high low picture, the solid demand we've got here with green bars, and price power, and above the average. Those 4 things make up my case. And for Newmont, it's bullish. Trend intensity rating is +10, and it's making new highs at the moment. Okay, so it's fairly simple there. Zipco, I said we'd have a quick look at that. It again has it's recovered pretty quickly. It's quite a good little trending stock, this one. But you can see here this move here. It got back on board here. We've got some nice volume through here, and then as it broke through to the new highs here, we get an especially strong move, which is really powerful argument for us. So we get the volume, we've got the momentum, we've got it's above the average. So our 10 intensity rating, of course, is plus 10. So what we do here is we're always managing risk. So we're looking at all these moves that break trend reversals and new highs. Now they don't all work out as we'd like. So we've got to make sure that we protect. So in this situation here, the way we trade it is our risk is always limited, because we limit our risk to X amount, 15% roughly. It can be a little bit less than that, but 15% maximum is what we risk, and the potential is always unlimited for a trend. So that's how we work the market. That's how we work the probabilities. We work on the likelihood the market's going to go up, the market bias is up, and trends in place that's more likely to be up next week than it is this week. All these sorts of basic reasons, old adages, but they're true. Again, keep it simple, stupid. All these basic things are really, really important, and we try to focus on other things. We get too complicated, we get too complex. We just don't need to do that. So Zip made a new high, good volume, good momentum, and it's moving higher quite nicely. High highs and high lows equals an uptrend, which is really all we want to see. That's that simple. Okay, another one, Neuron. Now this was Neuron Pharmaceuticals was actually a reversal of a downtrend, and we've got a little accumulation pattern here, an inverse head and shoulders, if you like, whatever you call it. It's a reversal pattern. We see the break of the downtrend line, the break of the moving average, and we start to see some volume starting to appear here. Momentum turns above zero, so we get a trend intensity rating of 10, of which it still is a trend intensity rating of 10. So again, a very, very simple outlook, very simple pattern. High highs and high lows equals an uptrend, so we just follow that trend with our stop. Okay, so we've got the potential of unlimited on the upside, but we're always minimising the risk on the downside. Okay. Okay, so that's Neuron Pharmaceuticals. Down is another one which is doing similar sort of thing. It had a little breakout to new highs back here in May, and it's continuing on quite well. And as I said before, we've always got to make sure we've got these trends. There's always a protective stop there in place to protect our gains, and to make sure that the market doesn't go against us too much and we give it up. So we can actually see here on this chart some selling has started to appear. So warning sign. That's all it really is. As I said before, markets always correct, they come back. If they come back in a bit of volume, we're wary of it, so we're watching this one carefully. Whoops, we've got a stop in place, and that's the main thing there. So down our EDI, it's going on quite well, had a little bit of a pullback. Again, we've seen a couple of lows here, and they've come off the lows there quite nicely, which I think we'll probably see in a couple of other charts. So demand still seems to be okay, but our protective stop is set, and if it goes off, we get out. Okay, so that's high highs and high lows equals another uptrend there. Medibank Private, which I've shown you this chart many times. We had a break to new highs here. It dallied about for a while, but then it got right on board and moved into a very nice little uptrend phase here. And again, we've got this a little bit of selling starting to appear here. So we've got these beautiful green bars across here for all this period of this uptrend here. Now all of a sudden we're getting a little bit of selling again. We're seeing those lows there have all been whipped up again, so the support is showing, which is a good sign. So although it's come down, there's some selling there, the buyers are still there, which is a really good sign for us. So at this stage, no concern. If the stop goes off, yes, we'll take our profit and we'll run and move on to the next one. But for the moment, it's looking fine. Okay, so you can see these beautiful healthy patterns here with all this volume driving these trends, which is nice. So the trend intensity rating on this one, like Medibank Private and probably down our EDI, the last one, it's actually come back to 8, and Medibank Private's come back to 7. So the trend intensity rating is just eased a little bit, reflecting that selling at the moment. But still, again, a very, very simple picture of buying a new high and following with a stop. And again, Telstra is a similar one. Again, we're seeing some selling, a little bit of selling maybe starting to be here. 3 of the last 5 weeks, we've seen a bit of selling there, and the price has come down. So it certainly has stalled, but we've got a simple stop in place there. Trend intensity rating is eased back to 7, so you can see the picture. Some of them are rating 10s, the Newmonts, the Zips, the Neurons are going really nicely. These ones we're seeing some selling appearing, so the trend intensity ratings come back a little bit, just warning us, not giving us a signal to sell. The signal to sell only happens when the stop goes off. Okay, so the trend of Telstra is protected nicely there at the moment. So, and we can see here momentum slowed a bit. All very common sense and natural. When you see a market come back, pull back, momentum starts to go out, but momentum is still positive. Remember, momentum is an acceleration, showing the market continues higher. If momentum slows, it can still go up at a slower rate. Okay, so momentum is really measuring the acceleration of the price. Okay, then we've got another little stock called Metcash, again, which had a nice little breakout here. Again, sits in the middle of Woolworths and Coles. An extraordinary picture, this one, but it is doing well, Metcash. We had a nice little breakout here back in June, not long ago, at $3.35. It's now above $4. Actually got to $4.20. It's come back a bit. A little bit of selling's up here, but we've got this really nice demand profile through here, looking pretty good. So we look for this impulse drift, no concern, but make sure he stops in place. We've got a trend intensity rating of 8. It's come back a little bit the last couple of weeks. So again, you can just see it's a very simple picture. Follow the trend with your stop. Bit of selling appears, and we make sure we've got our stop in place just in case it goes off. So that's what Metcash looks like. Okay, and another little favourite of mine, just on the out of our data universe, which is Pepper Money. Some of those little financial stocks I've liked, but you can see here Pepper Money here. If I just blow the chart up, you can see where it is, and it's had a nice little huge accumulation pattern here. But when the break came, it moved pretty nicely. It moved pretty nicely, and I guess we look for possibly R1 the next resistance level. It's up at 270, 274, and if I just squeeze this up a little bit, you can see the volume here in this uptrend here phase has been very, very nice indeed. Plenty of green bars here pushing this stock higher. So again, another uptrend, simply looking with price and volume and momentum, all these 4 things that I use just to keeps me focused on what I need to do. I don't worry about other things, balance sheets, profit and losses, all this sort of stuff. It's all rubbish to me at the moment as far as what the price is doing. The fundamentals tell me about a business. The price tells me about what the price analysis tells me what the price is going to do. So I'm not really interested in what the business is doing. I am to some extent. It's sort of nice if it's going well, but I'm more interested in what the price is doing. So that's where my focus is, on price. And we know that they can diverge significantly quite often. So we've got to be very careful. Okay, so that's the charts I got for today. Just really trying to show you how simple it is and how I try and educate people on keeping that thing very, very focused. Okay, now just want to talk a little bit about portfolios. I sent a little blog out last night. A bit about what I do. I was going to talk a little bit about the portfolios and how we can perform better than ETFs and the indices, and how we can keep ourselves focused very much on trends. So let's just assume we only hold stocks rising in a sequence of higher highs and higher lows, which you've seen today already. Okay, we don't hold stocks falling in a sequence of lower lows and lower highs. Okay, so that's just a simple filter of stock price movement. A simple method of avoiding falling stocks and holding rising stocks, which seem a common sense way of maximising performance. Okay, so we try and hold uptrending stocks and avoid falling stocks. The method of taking trend reversals up and new highs ensures as a starting point you will be holding stocks that are rising. Okay, now some may fail the test, and if they do at any point, they will be stopped out at a maximum risk level, which for me is 15%, leaving us only with the rising stocks. So as we get entries all the time, some stocks continue on a big trend, some have small trends, some fail and get stopped out. So that's the process we follow all the time. So a simple common sense method of managing a group of stocks focusing on uptrends provides a solid base from which to base your returns. Okay, uptrends are very simple. Okay, so ETFs and indices hold baskets of stocks. These baskets, they hold stocks which are going both up and down. ETFs, there's a place for these. Indices, it gives us a guidance to what indices are doing, but really they're focused on the main stocks. There's very few equal weighting indices. If there was, our ASX 200 would look a lot different to what it does now because of what the banks are doing and things like that. So I've sent out a blog article. It's on the website now if you want to have a look at it. Just talking about portfolio performance and why the Stockradar portfolios perform and outperform the accumulation index for a start, which is the price plus dividends. And why we only focus on trend stocks going up. The market bias is up. All those things about the market suggest buying a stock and holding it for a period of time is a good way to play it. The odds are that the market will be up higher next week than it is this week. All those reasons of a stock that's following an uptrend. Okay, so that's about all I've got for you today. Just really want to focus you on what I do and how simple it is to follow these things. Don't overcomplicate things. you don't need to. Okay, so plenty of trends hitting our radar at the moment. Get on the Stockradar and take a trial and follow what I do, and you'll find it all fairly simple. So that's about all I've got for you today. Trends hitting our radar are important, so make sure you watch your trends, hedge your stops, keep it simple, have fun, stay safe, and I'll see you all next week for another round of Stockradar Stocks on the Move. See you later.